Okay. So at 8:30, we had CPI numbers come out. Let's see what we got, man. Second daily has this fair value gap in here that we're running up into. Surpasses bullish shorter block. So this could act as an inverse fair value gap here. By alert isn't enabled for something like this. More so on a lower time frame. Mm, be ideal to see this run up. Just can remain open right here. It's incredibly large. Right, so should we get with that? But next objective will be these highs up here on the daily. We just want some quick low highs run up to. I mean, this one looks very obvious. This is like 2 points away. 2 points away. Sync this globally, so still bullish on the week. I mean, the next average on liquidity would be this here at 21, 2022. This is well, 1 2021. So that there, and then we also have these sides up here, which is 386. All right, so some have strong liquidities on the daily that we can run out to. But you know, this fair value gap here, this fair value gap here, those are pretty obvious. So this is like my ultimate target for the weekly. Will be this here, and the high here is 319, 1975. That's in globally. So this is obviously, this here obviously here is again within this weekly fair value gap. We have a weekly bearish short block here that we need to pay attention to. So, start with the body, which is the open, which is 463. Yeah, 463. Yep, so that's close enough. Weekly, right. So that's what I'm looking at on the weekly objective. Market's about to open in a couple of seconds. I haven't really looked at Dixie in a while, but if all goes back to normal with, tariffs and stuff like that, this here we should see this continue to move up. Risk on. Right now, risk is off, so that's why everything is dropping. But what's interesting is that the Dow and damn, all of our futures are moving in the same direction as our as Dixie. So interesting stuff. They run up in here, have a down day today on Friday or Tuesday. Come down, be down here on Dixie, and come back up. All right, let's go down to the 4 hour. Yeah, market's wide open. I usually don't try to catch the moves at 8:30. It's my option days. Anyways, so new day opening gap, not much of anything. This was yesterday. Also run up, took out previous day highs. Yeah, poor little dog. All right, there goes the market open. You want to start off a little bit higher out here. I don't know, man. We had this big gap up. I don't think the algorithm consider that, but look at that. So could have a down day today. That's possible. We're on the hourly. And this is all permissible. Keep an eye on that. All this here. All this is permissible. Run up in there and boom. You know, run up in here during the AM session, come down. Maybe come down to new day opening gap again. So that's over 100 points. Keep it moving up higher. Then we can take a look at this here on the hourly. You know, so real close, real close. Be exact. Just nearly hit that. So definitely going to have to keep an eye on this. One, two, three, four. This would be our 5 candle run. So maybe the next 30 minutes we float around with this, get like a optical trend entry up here to go short. Maybe take out this drawn liquidity here on the hourly and get a short down to the new day opening gap. If not, then run out to this, what I'm saying, that thing right up there. And then we have our constant encroachment. We could run up as well. See that get taken out. Continue moving up above it. But again, on the 4 hour, if we're bullish, you should see a fair value gap here remain open type of thing. Um, you have a breakaway gap right here. What time? This was in the morning. Right now here, I was looking at this yesterday. I think this is optical trade entry. Yeah, accumulating, boom, went up. So yeah, this is bullish on the lower time frame as it is with the higher. So that all looks good. And this is our data high that we're trying to come up to reach up to. Lots of lots of lots of lots of. Yeah, get rid of that. Get rid of that. Bib 5 kind of run on the one. Coming up for these highs up here, for these other highs up here. That's the problem. I don't know why my settings that were set globally on the other higher time frames aren't displayed over here. Whatever. It's not there now. See these hourly high here, sink globally. This here, sink globally. This here, sink globally. Let's try this again. This is the new day open gap from yesterday. Well, from the 9:30 or the 1:30. Yeah, so they're not sinking globally. We have them up here. No, we don't actually. All right, so that's damn annoying. Very annoying. Look how we got these Reltico highs up here. If I can run up, take a look at this here. And this 2.5 matching up with the drawn liquidity. You see that's just good entries. Yeah, man, that's annoying. So, one of these we could try is this. So, boom, 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 boom. Copy that over there. That's on the 15, and then, all right, so that obviously didn't work. So this hourly consummate encroachment is at 37. So it's like that, right? Hey, there we go. But actually, no, this is not correct. That's at 65.71. Yeah, so that didn't work. How you work? Me 21, 21. I'm supposed to switch over to using the desktop version of this, and I think we might need to. Wait, throw that back on there. Yeah, this is still bullish. The Libra come up for these highs up here. And this would be a good entry. That'll be a good entry. And then there's a bullish order block here. So I'll take it. And see if this could hold here. Nice. If inverse on the one, I'll take a draw on liquidity. I'll just reverse my position here. Let's see. Stopped out there. Oh, that is a fair. Ah, shucks. Didn't have the best. This is what I want to do is go short here. See this fairway gap here is open. I like for it to stay open. 58. We get past this hourly constant encroachment, that'll be good for us to run lower down to these lows down here. Let's hope we get close below it. Again, I want to see this remain open. So we're coming close to the 10 o'clock reversal. We're in a new five. This could be a bullish short block on the five, by the way. All right, some stopped out there. right, so I just got stopped out. With my stop loss a bit too close, but trying to figure this out. It's just 330. I mean, we're coming up to 390. Yeah, so why are we targeting this here is what I'm trying to figure out. Just move this to the 4 hour here since these things don't want to sync. Let's go to the daily. All right, so that's this here. The high here is 349. It's like the daily objective. This here, this here has been eliminated. All right, now I'm back down to the 15, or is it the 5? Okay, so we're still bullish. Still moving up higher. Any recent drawn liquidities would be, all right, it's way too far away. Let's go to the hourly. We have a bearish inverse fair value gap. You know, this here high, this here is a hourly drawn liquidity, right? And then we have this fair value gap here on the hourly, which I think this is possibly where we're going to be heading to. You know what? So we can very well move this up here. Now, will it go straight there without any retracements? I don't know, but that's a good objective to have, to reach out to. Go back to the 15. All right, let's try to figure this out. So this is the it's the fair value gap on the hourly, and this here was nine. Wow. So this is a new day opening gap, or rather a opening range gap, if you will. And this was at a time before this contract, so should be actually looking at this on a different chart. So be more appropriate to look at it from here. So here we took out this daily here. This is what I was looking for, right? So yeah, we gotta use the desktop browser or the desktop version. So we just took out this drawn liquidity. Um, and we took that out a while ago, but anyways. So this is NQ. Go out to the hourly. I don't know why this is. All right, so this is the fair value gap we're looking at on the hourly. There's that, and that's what we're approaching ourselves. That's what we're coming into. The reason why, if you sync this globally, this is NQ1, so this one's synced globally with the other um, chart. So, and the time here is 9 o'clock, 27th of February. So 27th of February. All right, so this is 15, a little bit higher. I'm not sure why this is here. We'll get rid of this. But this is where I do believe we're going to be running up into. So yeah, this is a good one to stay in on. But like we are here, one, two, three, four. Possibly get a five kind of run into this here. On the five, get a retracement. See we get with this five here. So we're out there. Notice how like when we do have a new five, we retrace. And the lowest we may go will be to the previous candle's high, closing the fair value gap. That might be like a immediate rebalance run up here. So it's like you gotta allow for price to come down here at the end of a new high. So that's 11 points. This entire candle's range here, well, not the entire range, but from this high here to this high, that's 17. But this here is from where we close. That's 11 points. So you just got to keep that in the back of your mind that, hey, so we have a potential inverse fair value gap. So this here is 1010 macro. We can still run up here. So again, where can we go here? Right here. And then we also have this here. Here's a 1.5. See how that lines up. But did well on the paper trading today. Two contracts, 5,000. See that little volume imbalance there? I bet this was optical trade entry. An objective. Be those eyes out there. So I went in for another entry at 175 down here after I saw this. So now we're up about 500 points. And I want to see us move up higher into this fair value gap, although we did just nick it. So I'm trying to be hands off right now, practice being hands off. Make this day 2 of the week, rather day 3 of the week, or the in the most recent week. And this allowed us to run up to where we know it should. So I'm gonna whip me up a drink. Yeah, I'm moving this one up. All right, so this is good. Real good. Really, really, really good. My ultimate goal is at 21,285, right, which is like right here. But I have my stop loss trailing, so I just got stopped out. So not bad. That last trade we got 50 points, our daily objective, and then we corrected that drawdown from earlier. So very good on the day. And look where we went to. Go figure, right? 444, right in the middle of this constant encroachment. That is our elite fair value gap, which is a good area to look. So it's other thing to be looking for is like a 5 minute chain of state delivery, which I don't think we're gonna get here. Not the clean ones, like something like this here. This is clean. Boom, run up, boom. Still got 40 seconds left, and we're retracing pretty heavily on the 5. And then, like we discussed earlier, this is inside bar, so we didn't even get to extend out. So we will be coming for these lows down here, which will turn this just into a inverse fair value gap. There it is. Well, there it was, but did I add? I think I added that in there. Yeah, I added that in there. There it is. There's the inverse coming out of a higher time frame, drawing liquidity. So if we were to take this, it'll be that stop loss will be above there, and maybe these lows on here. This is just a demo trade. Um, I got to recalibrate in order to trade back into, the Top Step account. So I'm just gonna log out, practice in the neural pathway. I'll be back. It should be 100 ticks, but I got it right above this inverse fair value gap, so I'd rather be wrong early than later. The reason why I'm coming down here is low, so I want to see this. Could very well have a run up here. Optical trend entry. Since we're here, let's just measure this out really quickly. Whoa. So this would be a little bit above here, right? Allow for retracement into this. Question is, why not just wait till we get a retracement here? Why just buy down here? Could have bought in here. So it's something that we're still working on. Still working on. So just move that noise out the way. Uh, yeah, I gotta figure out. So here will be where you get in at. Boom. So, let's get stopped out here, then go back in for a short. This is practice. And then if we get tagged out, it would be these sides up here. All right, boom. Short. Stop loss here. Buddy size. How many points is this? 61 points. Right? And then we have this fair value gap here. Body's respecting, respecting. So one of the things you could do is measure this, see where we're going. But that's how that should be done. And the question is, it's like, this is a good area. This is a good area retracement. Boom. We want to see this violate. We want to see this remain open. We want to see that happen, and we want to see this violate. We didn't get that. We got a smaller inverse fair value gap here, and there's that. ICT said if we cross over a fair value gap, we shouldn't breach below the constant encroachment of it. In this case, it'd be like this, right? So the example from yesterday was running here, come down, run up, break the fair value gap. We shouldn't come below. We should not be coming below this low here. We should continue moving up. So we went out to constant encroachment here. Came down below it. Should we break constant encroachment and continue moving up? It's a valid observation. Hmm. So I think new drawings will sync in layout. New drawings will sync globally. Okay. All right. So let's do something like this. Do I have to save it? So we get rid of these. These are good objectives. We. Oh no shit. This is NQ1. Yeah. There we go. There we go. There we go. Let's just refresh this. Okay. So sync globally. Got that checked. This is saved. This is the same. This is a different layout. I don't know why it's not working. There we go. Okay. So if I change the color on this, all right, fair. I'll take it. So that's what we got to do next time. All right. So get rid of that. And get rid of that. And get rid of all that. So very good trade. Came in at optical trade entry. You had very little drawdown, and then I didn't notice that we had a fair value gap here, and then boom. Now we're going lower. So one of the things we could do to our, although I would rather be more active in the trade, but one of the things we could do to our indicator is add like, tell it to display the fair value gap that is in question to becoming a inverse fair value gap. So that technically like this right here would be highlighted, right? But when we cross it, then it'll alert us, something like that. So let's look at this right here. Tap into this fair value gap here. Where are we trying to take this to? I mean, the easy objective would be down here. You know, it's 50 points. But man, just think that we were in this, we're looking at this since right here. Shoo, shoo. Wait, how many points is this? Yeah, it's 222 points. Yeah, it's over $4,000 in one contract. But where we got caught up in was this here. Looking to go, we wanted to go long, we got stopped out. Then short, got stopped out. Then we went back long again and moved our stop loss a bit too tight. And it got nicked here. Talking about in my top step account. And then we ended up getting in again, I think around here in top step account and it's ran up. So yeah, all this here is accumulation. Probably won't get anything until the next 18 minutes at 10:50. So I. So I gotta get ready for the day. We'll say in the top step account, which 9,000 is the objective. Right now we're at 1,500, so that means our next two trades can very well be 4,500 without any concerns of hitting the daily high, whatever the fuck they want to call it. So we just need 7,500. So we're looking at 3,750 with two contracts at most, really three at most. So that's like, let's call it 100 points. So we're looking for a 100-point move with minimum, maximum three contracts. Here, let me do the math over again. We're looking for two trades at 3,750. Um, and at most three contracts. That'll be 62 points. So like a move like today is what we're looking for, where we have a higher objective that's well over 100 points off. So, you know, and we don't need the whole 100 points with the contracts. We just at most need about 62% of it. It's a little bit over 50%. And we can fail at 50 contracts or 50 points and still be well in reach of it. But if we want to just go with one contract, that's 187 points. So it's pretty much like today. It's a lot of points. So you definitely would have to be looking at like a higher time frame, like the 15, like something like this here. You know, where we were playing around. I think it was around here. So that's right here. That would get us our, you know, um, if we look at two contracts, about 100 points. So it's like right here, real easy objective for two contracts. So we're gonna be chilling here at this lower time frame objective, fair value gap on the hourly. And I'm sure in like 12 minutes, 13 minutes, we'll get some action, start burning up in the macro. I don't know what that action will be. Um, it's time for me to walk away, preserve the mental capital. But we could very well run up here at some point. I'm just consolidating right now. So put a stop loss below here, for shorts, or put your stop loss here for your shorts, stop loss here for your long, and see where that takes us. But um, I'm done. And good day today for me. Anyways, I'm gonna get ready to get out of here. Now, let me just do this work right here real quick. Clean this up real quick. But that's it for me. That's it for me, dawg. Maybe I'll come back in the afternoon session, but probably not. I'm just gonna close off for the day, be done for the day, and come back tomorrow. See what we get. Peace.